Welcome to Did She Really Say That? The podcast for women who are done following the traditional business rules that don't serve us. I am your host, Katrina Van Housden, and in every episode, we break down what it really takes to scale your business as a woman. No burnout, no BS, no apologies. So if you're ready to discover how your natural female intelligence can become your biggest and most authentic advantage, grab your free guide at createherplanner.com/free. Now let's dive into today's episode. Well, I'm super excited for this conversation because taxes is often that conversation that nobody really wants to have. Let's be honest, right? And when we talk about it, we're afraid of it. We're terrified of the IRS, and we think all they want is more money from us, which we're about to disprove, honestly. So I'm excited because we're going to have this conversation with our amazing tax strategist, and we're going to be talking about strategies. And I love this conversation. So this is introduce you to, hold up. So Carlotta is going to share with us some of the best tax strategies, and especially women, we know you're building businesses. We know it, but you're also asking yourself, how do I build the legacy behind what I'm doing? So Carlotta, can you just share with us kind of how you got into this world of taxes? This doesn't seem to be like the ideal place to go when I think about what job do I want to have when I graduate? That was not my idea. So talk to us a little bit about how you got into this journey.
Well, it started when I was 14 years old, and I got a booklet that looks like this. And I don't know if can they see?
Yeah.
Okay. All right. I got a booklet that looks like this. This is the instructions on how to file a 1040. Now, I'm aging myself because these haven't been produced to come mail for like 20 years. But anyways, I was 14 years old. I was going through the mail and I asked my dad what it was, and he was like, you should read it. Well, I came from a family of entrepreneurs. Now, I'm not talking about rich entrepreneurs. I'm talking about we were very, very poor. Our family were business owners and we didn't have very much money at all. And so, but my family was always terrified of the IRS because they were business owners. And, even though they only made like, I think our income for the year was like $15,000 for a family of five, it still terrified them. And so I was like, I gotta understand this so I can understand why we're so terrified. So anyways, I opened it up and I started reading it, and I just became obsessed with it. And yes, that's so weird, I know, but at this point, I believe God just had me in the right place, right? And so anyways, when I was 18, I'd been dabbling in this, but when I was 18, I had done a tax return for one of my friends, and I'd just done it by hand, like old school, get the forms, fill it out. And obviously I didn't trust myself. So we took it to a big box place that did tax returns. And they came up with $2,000 less in refund than what I came up with. And I was like, darn, I did this wrong. I was like, can you just send your manager out here so I can understand like what I might have screwed up on? And the manager came out and she said, nope, you did it exactly right. But you've done it where they get more money back. And we did it in a software that doesn't understand this. At that point, it wasn't a strategy, but this way of doing things. And I was like, oh my gosh. So I'm right, and I got to make more money. And so that was the day I learned you could two ways, and that they both give you different results. And so that company had asked me to come to work for them, and they were like, I was like, well, I don't know anything, and they were like, you know a lot. So I think they had like a 3-day class or something we went to, and I ended up teaching a lot of that class. And as I worked there, I was like, started doing a lot of things with business owners, and I was like, man, these people are doing such a disservice. Like the IRS would be mad if they knew they were not giving these people enough tax deductions or letting them know what they could get. Because remember, I thought the IRS was a company of education, right? Because that's what they sent me was education. And so that's what I thought that it was. And I was like, there's got to be a different way. Like I need to go to the IRS and like tell on these people because they're not doing anything to help these business owners. And a lot of women here can relate to that. Like if you ever went, or if you try to do it yourself on TurboTax, same thing. TurboTax is the adult video game. Okay, let's just So we're trying to do it ourselves. And anyways, and so I was in college for accounting. I knew I wanted to do taxes, obviously, since I was 14. So I was in college for accounting and finance. And so when I was going to graduate, I was like, I want to work at the IRS. Like ever since I had worked for this place, like I knew. So like a year before I graduated, I applied at the IRS and I never got a call. So I was hired at the largest tax firm in Arkansas. Now there I was working on some of the people's, like, Arkansas has some of the wealthiest people in the world, and I
Mm.
was working on some of those things and some of their trust and things like that. And I was like, oh my gosh, this company could do all kinds of strategy. Why aren't they doing this? Like I was reading about books that were written on these people of like what they were supposedly doing, and they weren't doing it. I was like, okay, why are these people not doing anything? So I was like, the IRS needs to hear this. And so anyways, I got a call one day from the IRS 2 years after I applied. Like the IRS don't keep up with nothing. I don't know how they kept up with my number for 2 years, but they did. And so they called me and I got the job. And y'all, I thought I'd live the rest of my life there. Like I thought you'd be rolling me out of there in a body bag. Because if you can't tell by now, I love tax law more than anybody I know. Like it's
Thank
just
you.
in me. Like I love it. I love to learn about it. Like, I've read that congressional bill that just came out, like when it was in the House, before it went to the House, whenever it was in the Senate, like all the times because I love it. I'm obsessed with it. And it's not like I love it from a legal standpoint. I love it from a strategy standpoint. Okay,
Mhm.
this is the law. What does that really mean? What are the things that are going to come out around this law that means we can save more money? Because let's be real, they didn't write that law not to do strategies around it. Because
Right.
remember who writes the law? It's not the IRS. It's
No.
politicians that are
Mhm.
backed by people that are just like us. They're business owners. The thing is, they can afford a whole team of accountants sitting in their office telling them how to strategize
Yep.
tax strategy, and you can't even afford to have a bookkeeper. Like you don't feel like you can afford it anyway. But I'm going to tell you, you can, because instead of giving the money to the government, you could take
Yep.
a piece of that and give it to a strategist and keep the rest, and then you wouldn't be tipping the government. But we're tipping the government way too much money. If you want to tip them, there's a little box on the return that you can say give $3 to the presidential election campaign, because
Yep.
really who affects the tax law anyway. So I was working at the IRS, and I couldn't live with myself giving all these large tax bills. Like it was really depressing. And so I would do tax strategy with these taxpayers while I was giving them their tax bill. So I'd be like, look, I'm going to save you millions of dollars. You're going to do this when I'm done with this, but you can't do tax strategy backwards. You
Right.
got to do it at the time. Like I can't make up records for you, right?
Okay.
And the IRS is a company of documentation. So
Mhm.
I'm going to tell you what to do. Go do these things, but I got to give you this big bill. And so I everybody always loved me and signed the bills and did whatever, because they're like, oh my gosh, now I can actually go do this the right way. And I can go do all these strategies, and I don't have to overpay anymore. And I would say, listen, look at this as a consulting fee. You just paid the IRS all this money so I could help you. And so I got in trouble for being the agent that was way too nice and spent way too much time with people, but it was important. And so I started a ministry at night helping business owners pay less tax, because I believe, like, if I could help them pay less tax, they would give more to what they believed in. And so,
Mhm.
anyways, that ministry became my business when I left the IRS, and I would have never left, but there was this person that was in a network marketing company, and they were selling tax advice in a network marketing company, and they had sold nothing. They had so their income was zero, and they'd written off all of these expenses. And so it was considered a hobby. Well, most of it was considered fraud, almost fraud. I didn't go fraud, but like it was fraudulent. But then the rest of it was, a hobby. And that they were a blue collar worker making about 60,000 a year between the husband and the wife, and they wound up with like $100,000 tax bill. So that was like the straw that broke the camel's back. So you can do strategy the right way, but if you hear me, like I'm in ministry, I'm not in jail ministry. We are doing things on the up and up. We are
Mhm.
not gonna, do things. incorrectly, but we've got to use our money wisely. If you're tipping the government $20,000 because you're growing your business, what are you doing? Like,
Right.
becomes your number one expense as a business owner. So if you're a lot of business owners think they can just outrun the taxes until they get hit with that first large tax bill. And that from that day forward, they can never outrun it because it takes $7 in gross income for every dollar in tax savings. So if I can save you $10,000, that's the equivalent to 70,000 in gross income. Because when you have gross income, you have to pay your overhead, your payroll, your cost of goods sold, all those things. And usually you're at a 30% profit margin, right? And then after that, you're going to pay, up to 50% taxes. That's $1 left. Usually you don't feel it though until you get over that $150,000 mark, $100,000 mark, and then you're like, oh my gosh, this is terrible. What did I do? And you've already spent the money because your last tax bill wasn't that high because you had child tax credit and stuff like that, and it ate up that tax bill. But there's this imaginary line when you cross it, all of a sudden your tax bill becomes unbearable, and then you're constantly trying to catch up with the government. And that is a hard place to be. So, anyways.
Yeah, got
No,
questions.
no, I was gonna say, it's like you're just talking about tipping the government. I was like, even as an employee, how you fill out your W-9, it was like, because I was told, it was like, if you don't fill it out correctly, you're basically having given the government money that they're not paying you interest on. It was like an interest-free bank account. And it was just like, or an interest-free loan to the government. And I was just like, why are you doing this? Like, even as an employee, there's things that we need to be educated on. And it was like, because it's like you're giving the government money that it's an interest-free loan for them.
Mhm. Trump did away with that his first term in office. So a lot of people got, a lot less taken out, and their refunds got a lot less.
Yes, because you're
You're
not you're not aware of it.
Yeah,
Because
you
you
didn't
don't look.
know you weren't going to get this huge refund at the end. He actually fixed that where you're not getting a huge refund anymore because
Fascinating. So I haven't been an employee since then,
yeah,
but it's
that's
like
that's
that's
what happened. So
fascinating.
we got all these people we were doing their tax return, and like they were used to getting like $10,000 back, and they're not because they got all that already.
They
I
got
mean,
it.
if you're really low income, you already got all that. And so I would have people that they use that as their savings account. And then
Yes.
he did away with all that. And so yes, if you like have extra kids or if you don't make a lot, like sometimes you can still get a large refund. But nowadays, like you better fill it out correctly because what I'm seeing more times than not is you're having to pay in because you didn't pay enough because he made
Mm,
the margin so small. And he did
mm.
that so, so you didn't give the government a tax-free loan. But what I'm talking about as far as tipping is you ain't getting that money back. At least
Right, right.
on your W-9, you're getting the money back at the end of the year. No, when you pay this money, it's gone forever. You're
It's
not,
gone.
it's gone because you didn't do any strategy. And so, I think it's really important when you're a business owner and
Mm-hmm.
you start actually making money, the first thing you need to think about is taxes because it's not one of those things like, yes, okay, maybe the first year you only made, 10 or $15,000 and you're not going to feel it. But when you start, what I see in most business owners is they grow really fast all of a sudden, and then
Yeah,
they start leveling out, right? And so they grew really fast all of a sudden, and then they're like, oh my gosh, I cannot pay this tax bill. And then
right.
what can I do? And I'm like, well, 24 is already over, or 25 is already over. There's not a lot you can do going backwards. And so you've got to make sure that that's one of the first things that you start learning about and know when you get into business because it's a whole new world and it is your number one expense as a business owner. It may not feel
Mm-hmm.
when you first start, but it quickly becomes your number one expense.
So that had me ask the question because you were going through when you were sharing your story and kind of what you're dealing with and what you see typically with a lot of entrepreneurs. And I hear this a lot. When can you hire? Like, when is a good time to hire a tax strategist? Because you talk about, like, I have seen it. I have seen people have tremendous growth and then all of a sudden get that tax bill. So when's a good time? Is it before you're hitting that six figures? Is it when you're first starting up? When do you start considering or looking at hiring a tax strategist?
Usually about 40,000 after expenses if you're growing fast, 50,000 after expenses if you're not, because normally if you're not growing fast, because normally it's going to save you more than that, right?
Right.
So that's really when you need to start looking at it. Originally, it's probably just going to be enough to pay for itself and help you start growing in the right direction, right? So that's when that's kind of when the break even mark is of like what it costs versus what it's going to save you. Um,
Okay.
like on our services, we have a guarantee. We're going to save you more than we cost you, or we'll give you the difference back because we want to get you in there as soon as we can. Because also, we start talking about, okay, you a lot of women that are in business, they usually have like some W-2 income or they have some other income, and we start talking about investments like, okay, let's try to get that W-2 income down to zero. All right, let's talk about some turnkey real estate, or should we do an Airbnb? Should we do maybe an acquisition of some kind? Should we do maybe a investment in opportunity zone? Like what are we doing next? Because tax strategy for most people is just about cutting the tax bill. Tax strategy for us is about growing the wealth. Because if you're not
Mm,
growing your wealth while you're doing
right.
tax strategy, what are you really doing? I mean, you're just cutting your tax bill, but you're not. The reason why billionaires don't pay taxes is because they're constantly growing their portfolio. And then there's these tax laws that come in where they can exit their business totally tax free.
Yeah.
Well, us people don't ever hear about that. I mean, even when I was an IRS agent, I didn't hear about that. It wasn't
Mm,
started working with the billionaires, or the million, the 100 million plus. I started seeing what they were doing, and I was like, I didn't even know this existed. And it's black and white in the code. And actually, in the new bill that just passed, it's even better. And I'm like, I
wow.
know this was done by private equity groups because that's who's giving the money to the politicians.
Yep. Mm-hmm.
And I was like, because nobody, like, they say it's for small businesses. Let me tell you what a small business is in the
Tax.
context of the government. It's
Okay.
50 million in assets or below. You and I, that ain't don't sound small. And in assets or below, but that is a small business to the government. So
Wow.
small business stocks and small. I'm like, you know what? If we were educating the small business owners that were actually small how to do that crap that y'all are getting to do, saying you're a small business, we would be a lot wealthier over here. So I teach everything. I teach everything that those billionaires are doing. All the code that comes through, I'm like, yep, I know why you're doing that. Let me go teach it to the people that are making 100,000 or 200,000, so we can get to 1 million. Because ladies, we can't get to where we want to be unless we're doing the things that our male counterparts are doing. Like
Agreed.
Right.
4 years ago, I would have told you I would never do an acquisition. Like that's just not even something that I'm ever going to do because my brain could not even comprehend that. Remember, I'm
Mm,
still in this mindset of like, I just left a job making 65,000 a year. Now I'm making $1 million or whatever. And, I can't even think about like buying a business that's worth like 3 million. I couldn't do that. And now I'm making, over 10. And all of a sudden it's like, what I should have done this back then, but I was too scared to do it. Like
mm,
rules are life. I'm constantly praying faith over fear, faith over fear, faith over fear, because I do a lot and I still my every day I'm so scared of losing it all every single day.
mm,
Because I have a mentor that's a guy and he's like, why are you even worried about this? And I'm like, because I have to live like under the, women, we're always like so scared to spend our money. That's why we're so drawn to like Dave Ramsey, right? Like we
Yeah.
mm-hmm.
do not want debt. We want to keep our money. We do not want to do anything that's going to sabotage that. And it's what keeps us from being the billionaire, right? And
Yeah.
it's so hard.
Yeah. Well,
It's
we've been
Yeah.
taught.
it's hard for me.
Well, we've been taught that, women, create the budget, save the pennies, stretch the dollar. Like that's like a code of a badge of honor when women can say,
Mhm.
I've stretched this dollar to do this much. Like that is where we still are like in that cultural, like we haven't shifted yet, right? There's a lot of in what we're doing as women in business, we haven't just shifted in that mindset yet because we're still celebrating each other like, yay, you saved $5, right? And all of that. So we're still in that saving scrimpting mode that comes from our parents during an era of you know recession and different time periods that in as women we really haven't had access to controlling billions of dollars. It's the very few females that actually do this. And so when we're bringing up through the summit, through this money revolution, right? Because it is a revolution. It's we've got the money, we have the buying capacity to do incredible things, and yet, like you said, I'm afraid it's all going to come crumbling it down because I'm a woman.
Yeah.
Mm.
Well, you've got to have two different mindsets. And this is what I
Mm,
learned when I went from, $100 or $200,000 a year to a couple million. I had to shift my mindset. So I
Mhm.
had with my personal bills, girl, I'm not buying a pair of jeans unless I have a coupon. I'm not going to McDonald's unless I use the app. I'm not spending money on
Yeah.
personally, like my fist is like this. Like I am not spending it. In business, though, I have to be like this because if my fist is like this, ain't no money coming in, right? So
right.
it's all I'm just in business. I guess what I in my brain, it's not my business. It's God's business, and I'm just here to manage it. And whatever
Mm.
I get to take on at the end of the day, great. But this is not mine. And if I don't invest it right or I don't manage it right, and I try to like hold on to every cent and I try to like, try to get the best deal on everything, I'm never going to have a business. So my friends will always be like, you are so weird. Like, you'll just spend all kinds of money on these things, but over here, you won't spend it on anything. And it's constant, but you have to compartmentalize because I used to teach a Dave Ramsey course. Like I come from that, background. I would have never gotten to where I am in business with that mindset. And
Yeah.
Right.
I think for women, you just have to split your brain. So your personal bills, that's your personal. You know, over here on your business, make sure you're paying yourself so you can pay your bills, right? And then you
Right.
manage that money like never before. But over here in your business, you're gonna have, if you want to really grow your business, you're gonna have to take on some debt. You can't be
Yeah.
like, I'm never taking on debt because you're not gonna get where you want to go. And that was the hardest thing for me because I was like, I don't want to go in debt. I don't want to ever lose what I've worked for. I don't want to ever lose, any of this little $100,000 I have. But if I
Right.
did, I wouldn't be worth millions right now. I mean, our business valuation's like $15 million. Like, I wouldn't be worth that if I was over here. And that's for one business. We have 7. For one business, it's worth 15 million. We just got our valuation. I wouldn't be worth that if we were over here. Like, I can't spend $100,000, like, so that's where you've got to start splitting your brain, compartmentalizing it, even in life, compartmentalize. You're over here and you want this work-life balance, all that. That is a myth. Okay. Work-life balance in the summer, I take off a week, I work a week. I take off a week, I work a week because you cannot compartmentalize your days. It can't be like, oh, I'm going to go do this or I'm going to go do that. In business, there are days where you have to work 20-hour days and your kids are like, where are you? So then the next week, I'll, spend time with my kids and I go to the lake or I go do whatever they want to do. But I homeschool my kids. I mean, can y'all imagine running 7 businesses while homeschooling your kids while, all the things? It isn't easy, but you have to compartmentalize. And I promise you, they're not going to look down on you for doing that. They're going to see, like, you know what? My mom worked her butt off, but she also did these things with us. She also made
Yeah.
time for us, and it was quality time. It wasn't, like she's not over here doing whatever else that she could be doing with the business. All of my businesses can run without me, but they run like when I'm here, I'm doing things that are going to grow the business. I am all about scaling the businesses.
Cool.
Um,
Yeah.
get out of your business as soon as possible. The first thing I did, I hired somebody. You've got to have a team. When I was making so when I started, I was doing, my packages they were so cheap. I was making nothing. But you know what? The first person I hired was a person who's still with me today. She had a master's in accounting and she came on for $15 an hour. God knew I needed that woman because I couldn't afford any more. So she came on at $15 an hour, but she gave me stability. So as a mom, well, it's not even as a mom, I deal with bipolar disorder. So I can be up and down, which is great if you learn to use it. So on your ups, man, you got to like run like you never before. You got to hustle, hustle, hustle. When you're down, your team has to step in to stabilize you. And I think it's the same whether for me, it's bipolar. For some of you, it's like, I just need to be a mom or I just need to do this. And like, you need that stability.
The
So when
team
there's
is
two
super
of
important.
you, yeah, when there's two of you, like one of you falls down, the other one can pick you up.
Yeah.
And now we have over 40 people. So whenever I fall down, somebody's picking me up. And most of the time, they don't even know if I'm here. They don't know what I'm doing because most of the time I'm taking off or I'm with my kids or whatever. So I think that's, there's no such thing as work-life balance. Get that out of your darn head because otherwise you're always going to be disappointed. If you want work-life balance, go get a job.
But I also think it's like, as an entrepreneur, if you truly love what you do,
It's never work.
It's never work. It's like you do have a balance because you enjoy what you're doing. And
Yeah.
it's like, and you feel your
It's never
bucket gets
work.
filled.
Yeah. So
But I do want to address the best question that you excuse me, the best question that I heard on your webinar about how people, when they're building their business and they're looking at how a tax strategy or putting in a tax strategy, and it's like, and they're looking at all the things, it's like, I want to be able to deduct this. I want to be able to deduct, I heard I could deduct this. And it's like, and if you go to your accountant, it's like, is this a deduction? Is this a deduction? And most of the time you're going to be hearing like, no, it's not. But it's like, so how, like, what was it, how you turned that around? And it's like, because most things we can deduct. It's just the knowledge behind it.
right. So the number one thing I always say is when you're asked, everyone wants to ask their accountant, is this a deduction? Even if you use ChatGPT, I love AI. Is this a deduction? It's going to say no. ChatGPT is going to say no. Your accountant's going to say no. Everybody's going to say no because you're asking the wrong question. You have to ask, how can I make this a deduction? ChatGPT is amazing for this. So before you ever even get a strategist, like, how can I deduct blank? And you get the details, but it'll tell you exactly how to deduct it and when it can be deducted. Are you going to want to do all those things? I don't know, but you may.
Right.
So like, for instance, is my mileage to my office a deduction from my house? No, that's commuting, right? That's what the IRS law says. How can I make it a deduction? Go by the bank first, then go to the office. Like if you change the situation, all of a sudden it becomes a deduction. But in an audit, you're like, oh no, I just drove from my house to the office. And then they're going to be like, okay, well, this is disallowed. You make sure that you're not commuting, that you're actually, going in the right direction. Right. And so anyways, that's exactly what I'm talking about. Just knowing what it is that you're doing, put it in your routine and know what you can deduct. Because when you're first starting out that 0 to 40, you don't really need a strategist. You need to know what it is that you can do. You don't even really need a bookkeeper at that point. When you first start, you really can't afford a bookkeeper. And I think in all my experience, the people that try to DIY their QuickBooks, every single time it's wrong. So don't even use QuickBooks until you're actually can
just use an Excel sheet.
Use an Excel sheet. Exactly what I said. Use an Excel sheet. Put in an Excel sheet until you can hire a bookkeeper. Do not try to DIY QuickBooks. That will get you in so much trouble. Every single time I have had anybody use QuickBooks, they're always either over overstating income or overstating expenses or understating. Like it's never correct, because they'll just, the AI tool in QuickBooks or whatever, it just puts it to certain places, and then you're like, oh, that's probably right, and you accept it. It's not that easy. And so you'll put
Yeah.
stuff on the balance sheet that doesn't affect the tax return when it should be on the tax return. So anyways, what I'm trying to say is, until you get ready to hire a professional, put that stuff in Excel. Do not try to be doing it on QuickBooks.
Mhm.
That's
Yeah,
crazy.
you're going to pay somebody to clean up those books more than just your regular bookkeeping.
Yeah, don't do that.
Yeah.
So I have another question. So, because I want to get a little technical, I want to get a little tactical for the women that are watching.
Okay.
So we've got women that are building, they're making anywhere between 100 and 200,000 a year.
Yep.
They're looking at their monthly and they're like, where does this all go? And they're also wondering, how do I create the legacy with this income? Like, how do I start building legacy income with the money I'm generating? So what are some of the tax strategies? And I know this is going to vary different from client to client, business to business. So let's look at a woman in a coaching business. That seems to be the big rage right now. There's a lot of women that are coaches, that are teaching. So they're doing one-on-one client work or group coaching. They're pulling in the income. They, have a totally different lifestyle. What should they be doing with that income that's coming in?
Yeah. So first you need to do personal strategies, because okay, so say you're making $200,000. You're about to give all that to the government if you don't start doing something really fast to decrease the tax bill as soon as you start making that, right? So you need to start doing personal strategies. Let's start shifting some of that income around. So that's going to be like hiring your kids, doing the Augusta rule, doing reasonable compensation, doing all those things that are going to lower that tax bill. Because if you don't lower your tax bill, you're not gonna have any money to build wealth, because the government's
Mhm.
so let's start doing tax strategies so we don't have to give it on to the government. And then with those things, now we've lowered our tax bill. Now we can actually, instead of paying the IRS, we can take that money and start building wealth with it. So the first things that I like to get into when I'm building wealth is real estate. I started in real estate. It's very much for me. It's very steady. There's lots of tax strategies around it, and it starts building your portfolio, right? And
Yeah.
it's just what I prefer, because for us women, usually it's like something we can understand, because we have a house payment, we have, somebody managing. We have turnkey real estate that's already like it already has a history behind it.
Mhm.
Make, what the house cost, what the tax deduction is going to be like. That's what I like to get into first. And then I like to start pulling in some other either business acquisitions. I really love business acquisitions. Obviously, I'm in mergers and acquisitions. That one does take a total mindset shift. So
Mhm.
might be something you're not comfortable with. So start with real estate, then maybe get into some off market uh, wealth building partnerships or something like that. Let me give you an example. So a lot of you guys are doing crypto and things like that. Crypto doesn't shoot off any tax strategy. So if you could get in, maybe get that, but also have like maybe you invest in some oil and gas that gives you some tax strategy. Maybe you do a syndication that gives you some tax strategy. Maybe you do um, a small business qualified stock that you're investing in. You're just a shareholder in it, but that'll give you some other income. Get into some investments that shoot off strategy and that shoot off tax deductions and are not just like, okay, let's just build all this income and just be taxed more and more and more. The more you make, the more you need to be, you've got to bring something that's going to shift your income where you don't have to work. Like right now, if everything ended and I couldn't work, I definitely would have to cut back on my employees for my real estate, but I could live off all my real estate.
Hmm.
It is, we have 43 doors. I haven't bought really any since I started making a lot of money. Now it's all about buying businesses or doing businesses.
Mm.
But when I was starting, that's how we got to where we are. That's how we were able to feel safe enough to
Mhm.
to make those decisions, right? You we have to know that there's a fallback plan. Women have to know there's a fallback plan. And real estate is the safest feeling fallback plan. It's
Yeah.
also the greatest way to move money from one generation to the next. So if I buy a property for $200,000 and it goes up to $1 million, when my kids inherit that, they inherit it at $1 million. I've
Right.
already deducted the full 200,000. My kids get to deduct the $1 million. Nobody paid taxes on. Nobody paid $1 million. Nobody paid taxes between the 200 and the $1 million. But they do that because they want billionaires to be able to do that. So they give
Right.
it to us too. So that is exactly what you do to move money to the next generation.
I love that, 'cause real estate is one of my favorite things too. And it's just like I've had real estate, I've done a bunch of different things with it, and it's one of the easiest things to understand as
Yeah.
far as the deductions, because they're almost obvious. Except for like the depreciation, which you kind of have to calculate. It's simple. It's a simple strategy.
Yeah, and we do cost segregations on them. We do,
Mhm.
it's good. Like I like to start them off the first year as an Airbnb, and then switch them over to a long term or like do Airbnbs. You're going to make about the same income and the same return on investment, but it has a lot more strategy that can offset your other income. So if you're trying to
Yeah.
like, get make more of your other income not taxable, that's a great strategy. There's a lot you can do with real estate. So
Yeah.
Okay. So I want to step back a quick because you mentioned some of the personal strategies and you mentioned a lot of phrases that I had no like idea. So you talked about the kid one and then there was something
the
like
Augusta rule.
yeah,
So
what
that
the heck? Okay, there because I have everybody I can hear the audience going, "What the heck is that rule?" Because you made it sound really important and then you kind of glided over it. So I'm like, "Wait, I got to come back to it."
All right, so the Augusta rule came out of Augusta, Georgia. Remember, everything's made by a politician. So in Augusta, Georgia, they were having a problem having enough housing for the golf tournament that comes there. And they said, oh,
Mm.
we've got to have a way to get more housing for people in our town during this tournament. So they went to Congress, and Congress made it where everybody in America can rent their home out for 14 days a year. Doesn't matter if you actually own it or if it's an apartment or whatever. It has to be your residence. 14 days a year, and it's tax-free income. All right.
Shut the front door.
So what's the strategy?
Seriously? Wait, hold on. Wait. What?
Yeah, it's awesome, right? But let me tell you the cool part. Owner, now you can rent your home from yourself.
No.
Yes, and it's a tax deduction to the business. So say you rent your home for $1,000 a day for that 14 days. It's $14,000 deduction on your business, and you don't have to pay taxes on it. So.
Now, do they have a?
Wait. I'm
Oh,
still
no,
absorbing this. Okay.
I get it. Absorb it while I ask this question. So, do they have a cap? Like, if you have, if you have an apartment that you're paying like $2,000 a month for, can you rent it for $1,000 a day during those 14 days?
Yeah, so what we do is we go out and we do a comparison. We get this for our clients. So what our service is done for you tax strategy. So that we do all the paperwork because that's the number one thing that is the problem with the IRS. So as long as you're doing all the paperwork, you're good. So we do a comparison because remember, you're renting an apartment for $2,000, but that apartment it doesn't have any furniture in it. So like this is a we do a 3 house comparison. We get the value, and that's your rate.
Nice.
I'm still recovering over here because I'm like, well, heck in bejeezers, why aren't we knowing about this?
I knew that rule. I did not know the background of that rule. I didn't know it was because of the golf tournament in Augusta. That's awesome.
So it's something
everybody went to the bank.
It's something everybody should be doing, right?
Yeah.
So S corp election, a lot of people will like come to me and they're not using it correctly. If you do an S corp, obviously. So if you're a sole proprietorship, let's back up. When you start a business, you should always be an LLC. Okay.
Correct.
Because an LLC, you get to choose how you are. Right? You get to choose how you're taxed because the IRS doesn't recognize LLCs. When you're at about 50,000 after expenses, after all of your expenses, then you're normally going to elect to be an S corporation. But that is not where it stops. That's where it starts. Coupled with that, you need a reasonable compensation analysis. And I don't mean one that's like a 1 factor or 2 factor approach to figure out what your reasonable comp should be. I don't mean going to the internet and saying, what should my reasonable comp mean? I mean a tax strategy infused reasonable compensation. So ours is a 4 factor and it gets you to the least tax possible. There's some on the internet that are 2 factor. They're just doing it for compliance. That's a waste of time and a waste of money. Like, let's do it strategy infused. So anyways, we do that. And normally that's going to save you another $15,000. Okay. So if you got the Augusta saving you, say you rent your house for 14 days, 14,000, that's going to save you 4 or 5,000. You've got the other that's saving you, 10 to 15,000. Maybe you have a couple of kids. Maybe you can pay your kids. That's a tax solution into the business, tax-free income. So you're shifting, if you pay your kids, like 2 kids, 24,000. Because let me tell you, if you're a coach, your kids are probably involved in all kinds of things. You're spending a lot of money on them. You're trying to run all over the places. Let's have them pay those expenses. Let's have them pay for their vacations. Let's have them pay for their things. They can't pay your house payment, but like they can pay for things that are theirs.
Mm-hmm.
So we can start putting money back for them, because when you start doing good, you're like, okay, how do I get money into my kids' education? Do a Roth IRA, because they can, now that they're working for you, they can do a Roth IRA. They can take that money, all the money out, once they need it, they can take it out to spend, on their college or whatever. And then the rest that they earned, the interest, they can take that out when they retire. It's the best tax savings vehicle, period.
Awesome.
So there's that. And then we've got, there's some others in that personal.
There's some good stuff. Wait, so I'm just going to plug this. You are doing a 2-hour webinar. Like, I know that you talk about all of this in depth, in detail, with slide notes, with even a workbook that they can get their hands on, which details this even more. So I know that we could spend just forever in this world. So, but there is only so much that our brains can absorb at one point. And I think you've just blown mine. So, and it was a little thing, because you're like, oh, that's something we do. And I was like, oh, for the love of all that is holy, these are the things that are missing for women. Like, if the women knew that they could take an apartment, a house, spend like 14 days and make it, like, what the heck are we missing here? And these are the things that I'm excited to bring to this summit. And these are the little nuggets that really, they're making a difference. It's something they can actually take action on. So now that they know, my next question is, how do they find a tax strategist? Like, there are all sorts of people out there, just like there's good and bad accountants, there's good and bad tax strategists. What should they be looking for in someone, besides the fact that you're just gung-ho, totally absorbed and obsessed? Should we find an obsessed tax strategist, someone that just loves law? Is that what we're looking for?
You've got to have somebody that will do the documentation for you.
Okay.
That's the number one thing. You've got to make sure your documentation is correct, because that is what gets you in trouble with the IRS. It's not that you have the expense. They don't care what expense you have. All they care about your documentation. The IRS is a business of documentation. So that is how our business started. It was because all these things existed. People would do them. I would disallow them in an audit because they didn't have the documentation. Like, that is the most important piece, is, are they not giving you templates that you can go screw up on your own? Are they doing the documentation, right? So that's important. And then also that they're not just doing things your accountant should be doing. A tax strategist and a tax preparer are two different things. A lot of the things that tax strategists say they do, your tax preparer should be doing. Okay, like they'll talk about like 2,000 deductions. Okay, that's a tax return. That's not strategy. So getting the tax return done correctly. At our company, we offer tax strategy infused tax returns, but they're really just regular returns, because that's what our process is, what every accountant should be doing. Sadly, they're not. And that's something I've learned very quickly. Most of the returns I review are wrong when they come in the door. Anyway, so you need a tax preparer that does tax strategy infused tax returns.
Okay.
You need a tax strategist that do the actual strategies that take third-party people. And this is what sets us apart, besides us doing all the paperwork. You've got to have somebody that is willing to work with all the other lawyers and engineers and all the things that can bring a tax strategy together, because you may be thinking, oh, well, I don't need I don't need advanced strategy, or I don't need that. Look, you're leaving money on the table because your accountant or your strategist doesn't, they're not experts in something. And accountants are number one for not letting people come into their business. Like, they aren't going to call on an expert. They're not going to bring someone in. You know what they're going to say? It's a red flag. Everything they don't know how to do is
Yes.
a red flag.
Yes. They don't want to get audited.
They work for the darn IRS, and the IRS is probably, you know what? I'm going to say this. They're more strict than the IRS because I worked at the IRS. The thing flags, I classified returns for the IRS. I looked through returns and I classified what the issues were. Never once did I classify a home office deduction. Okay, why are we saying a home office deduction is a red flag? That's stupid. But it's like everything that they say, like, if they don't know how to do it, employee retention credit, you know, that came out a couple of years ago, it's gone.
Yeah.
Do you know the number of accountants who were saying that was a red flag? And I'm like, what? This is just the government's trying to give your client money. Like, that's not a red flag. You just don't know how to do it, so you're calling it a red flag. Like, I did not have the capacity to do them myself. I had to outsource them. It doesn't matter. Like, I will outsource them. If I don't have the capacity to do it, I will find you the person that can do it. Because, I mean, back then, you know, we didn't have the capacity. Now we have like a whole network. Like, we do everything. But until last year, we only did 4 strategies. The other 98, we had to outsource. But when you're looking at strategies that are actual strategies and not just like those things that I blew your mind with a while ago, the actual strategies, those firms will only do 1 or 2 strategies. So they'll only do cost segregation, or they'll only do R&D credit, or they're only those kinds of things. Like, guys, what are you doing? Like,
There's a cap. It puts a cap on you. It puts your cap on your wealth.
right. For sure. That is why we stay small, because we are not willing to get someone on our team, because we're so scared of, well, that's going to cost me money. If you have a strategist that's costing you money, well, honey, you got the wrong one. Those people should be making you money. What are you doing? You know, that's the problem, is that we don't think like that. We think from the place of like, oh, this is an additional cost. No, your strategist should be making you money. Your wealth advisor should be making you money. Your coach should be making you money. Like, none of these are expenses. If they're not giving you a return on investment, fire them.
Excellent.
Amen.
Amen.
Done. So last thing I want to touch upon, because I was just blown away that you do this, and it's always been like near and dear to my heart, is with working with kids. So I know that there's a ministry that you do working with young children to teach them. So talk to us a little bit about this.
Right. So we start teaching kids at 7 years old how to buy a business, and how
That's
to,
incredible.
yeah, like, because we don't want them to go start a business. They don't know nothing about starting a business. They need to learn how to start looking at these things to buy when they get old enough to buy, right? Like, why would you go start a lawn care company when you could go buy one that already has revenue? And so we had a 9-year-old buy a business, a 16-year-old buy a business, multiple 18 and up, but those are 2 that are bought young. And we're just teaching them, don't be like the rest of society. Why do they need to buy a business instead of starting a business? Well, starting a business, your failure rate is like 90% or something. It's insane. But when you're buying a business, it's already been in business for 20 years, your failure rate's very, very, very small.
Yeah.
And so that's why we teach it, because we want them to come out. We want them to have stable income, because we want them to be able to not go get a W-2 job. And starting a business isn't usually stable income. It's up and down, right? So we teach them that. We teach them real estate. We teach them all the things to do with building their wealth. So with kids, it's called the pathway to wealth. With adults, it's called the pathway to zero, because adults care more about paying 0 taxes. Kids don't care about paying taxes.
Oh, I love it.
Called the pathway to wealth. We give them a board. This is our wealthopoly journey, and their family starts doing this whenever they come, and it's their own Monopoly board. We're teaching these kids how to play Monopoly in real life. And so they put their own real estate on it, their own businesses on it.
Nice.
That teaches them, like, look, I'm creating my own Monopoly. At the event, we teach them, we teach them Monopoly. We teach them the cash flow game. We're teaching them the money of being an adult And you will just be surprised. Like we have kids right now that are finding deals for clients. They learn way more than their parents.
Yeah.
They're like, it's so funny because they'll leave and they're finding the deals for their parents. And I'm like,
That's awesome.
amazing. So what we do, we focus on, we believe if we can teach kids to serve with all of their heart, that is on the pathway to wealth. There is a giving side and a wealth side, because if you give with all of your heart and you serve with all of your heart, you will never lack money.
Right.
Money follows the people who serve. And so if we can teach them, like when we do our events, we're like, okay, first thing in the morning, we're serving, we're making blankets for the homeless, we're making cards for, people in foster care, we're doing whatever, because we're serving first, then we'll talk about business. We always go with like servant's heart. Let's talk about business. Let's find these deals. Let's talk about how to, if you are going to start a business, because obviously sometimes kids can't always go buy a business, right? Their parents aren't going to co-sign for them. So we do talk about like starting a business when they're still a kid, just to learn the mechanics until they can become 18, and we can help them buy one. Because I don't love parents co-signing with their kids, because the parents think they own the business and they run the kid. I need the kid to like have the responsibility. And
Yeah.
a lot of our kids have like hair bow companies and jewelry companies and whatever. So anyways, it's a huge thing for us. We love it. We love to, it doesn't, our ministry does it. But it's a huge, it's just something that is near and dear to me, because I love teaching. I used to not like kids. Like when I started this, God gave me the heart to love them, because when I started, I was like, I don't even like my own kids half the time. Like, I mean, I do, but you know what I'm saying? Like,
Yes. Right there with you.
I did this event and I was like, oh my gosh, I love them more than I do the adults, because they care and they just love you, and they're drawn to like learning this stuff. And so anyways, I love it. So that's what we do.
Awesome.
So for anybody that's listening and watching, for all of our women out here, we definitely connect with Carlotta. I can't call her Carlotta. I don't know why. Carlotta. Meet with her, connect with her. Her information is here on this page. You're going to have an opportunity to listen into her webinar. Definitely get signed up for that.
Definitely have a notebook with you when you listen
Sign
to
this book she has.
Yes, just buy the workbook.
Just buy the workbook. Like, let's be honest. If you're going to invest,
workbook and take notes, because I'm telling y'all, like, my daughter is in school for accounting, and she said, like, Mom, this is more than you learn in 2 semesters of accounting. Like, it's not no pitch fest. Like, no, this is not pitching. This is like hardcore learning and understanding tax law, like how to implement it if you want to DIY it. Because I know a lot of you women are out there like, I just do this myself. Well, I will tell you how to do some of those yourself. Like, it's a lot, and it's a solid training that I should be charging for, but why? Like, women need this. Everybody needs this, but it's very important we don't do replays, because we feel like you should pay with your time. Like, come and learn.
And the thing is with finances, if you are willing to pay, you're willing to play. And that is what you've got to look at it. This is a money game. The game is rigged for businesses, to be honest.
It is.
And it is made for you to become wealthy. And so we want to give you that opportunity by bringing incredible speakers, talents, and actionable steps that you can take to start building that wealth and stop being scared to take those actions, because that fear is holding you back more than anything. So I love this conversation.
I love it. Thank you so much for your time, Carlotta. This was extremely valuable for everybody listening to it.
And you're never going to get rid of the fear. Every day I have to pray faith over fear, and I'm making millions, but faith over fear, because I'm telling you, the bigger the business, the bigger the problems. Like, numbers just get bigger, but God gave you a time such as this to do what it is you want to do with your life, and to provide for what you're doing. Read Proverbs 31. Like, that woman did not just sit at home doing nothing. Okay. Like, this is your time. Take what you can get, and don't be living in this fear. Like, I have to live on beans and rice, because you can't live on beans and rice in the business and actually make it, because a business doesn't live on beans and rice. It lives on loans and wealth. It lives on money. It lives on cash flow. It lives on sales. You just have to really, you have to be ready to have a different mindset and compartmentalize.
Awesome.
I love this conversation. I can't wait. I hope for all of you that are listening and paying attention, you took notes, that you are diving into this, and that, you're here to make a difference for yourself and for your family. So that's why you're here. So thank you for joining us here on the Create Her Money Revolution, because this is the time for women to step up. You are about to inherit more money than you ever knew is possible for you. And this is the time to start knowing how to move it and keep it going forward. So with that, have a great one. If today's conversation hit home, don't just listen, take the next step. Download the free Create Her Authentically guide at createherplanner.com/free and discover how to build your business in alignment with your natural rhythm. And if you love this episode, please leave a review. It helps more women find the show. I'll see you in the next episode.